Let's take a look at what happened in the stock market this week as we look at the 60-minute chart of the S&P 500. And you can see that I prepare that during the week as I see different things come out during the week that may be some news that is significant. And you can see in here as we look at this chart that early on in the week, way down here on Monday, the Turkish lira fell 5%. Tesla dropped, as they said they're staying private. But then the market really barely flinched. You could see it right there as there was just a little bit of a downtick right there. And then the U.S. and Mexico announced that they were getting close to a deal, and Canada may join in at that point. You could see the market spiked right over there as that news came out. And then on Tuesday, the world markets moved higher on the U.S.-Mexico trade pact. But then the market gave ground during the day. And then, of course, as it seems to do a lot at the end of the day, it then firmed up because the shorts just can't stand holding any positions. So that happens. We get these early day rallies seemingly every day. The news came out on Wednesday. Home sales were really weak, down for the 7th month. And they're blaming that on low inventories right now, but it might be interest rates going up. It might be a consumer that doesn't really know whether it's safe to be spending money on anything like that. And of course, rental properties are much more in demand. Amazon gets this upgrade here on Wednesday, and 65-point gain, 3% plus on that. And that lift the NASDAQ 90 points. As you can see, this was the big gainer here for the week on Wednesday. China stocks fall on Thursday overnight as the data showed that there's some risk of slowing going on in there. Now, the PMIs at the end of the week were a little bit better. Here's where on Thursday the president came out and he talked about the $200 billion in Chinese tariffs coming as soon as next week, and you could see that brought a sizable decline in the futures, 29.12 down to about 28.95. So that was about a 17-point intraday drop. That's pretty unusual these days, and well, towards the end of the week things did get weaker. Here on Friday overnight, emerging markets were weak as the currencies really crack. Historic lows for the Indonesian rupiah and the Indian rupee. Now, the Indian stock market is one of the best stock markets that we see right now. And Turkish interest rates, we talked about they're going to have to keep raising rates to defend the lira, and they moved them up to 20%. So, and the Bank of Japan, this is maybe the biggest news of the week that nobody pays attention to. They made this little adjustment that they're going to do one fewer rounds of their QE per month. Now, they might adjust the amount that they buy up, and it might be just technical that they're doing, or it might be setting up the beginning of the end for their QE. And their QE, just like it did here in the U.S., simply keeps money in a liquidity trap. You cannot grow economies when the government is everything, and that's essentially what we have had, and why Bank of Japan for 3 decades has been doing this, thinking erroneously, as they are Keynesian brainwashed people, that they can keep doing that, and that's been their issue. They need to get out of the market, just like our Fed. I think we should get rid of all central banks, don't you? This is Friday, of course, and Canada and the U.S. still have no NAFTA deal, and it seems like they're pretty far apart. Ford came out and said they're going to cancel the plant that they were going to build in China, and the dollar jumped. And when that happened, sellers came back into the market. As you can see right over here, as the S&P 500 fell a quick 14 points or so intraday. And here we are just with a couple of hours left to go in the day, and the stock market is actually down for what is the 2nd day in a row. And that in itself could be turning out to be something historic, as the stock market gives just a modest amount of ground. The next thing we're going to look at is the stock market. So we thought the stock market would dip and then rally, and it rallied and then dipped. So that was a poor job by us interpreting the rhythms of the market. That's what we do, and we're always trying to project out. Every piece of analysis we do has got a projection on it, because cycle analysis is time and price. So we're always hoping to be able to do the best that we can, like 60 or 70% correct on those projections. And we do great on the longer term ones. The shorter term ones are harder. They really are. Take a look at the S&P 500, and I've added one little piece of analysis in there, and I explained that to our members, and that is the that green cycle bracket on the bottom. I had checked in with Arvi. Arvi is my assistant cycle analyst, and he's fantastic. So we check in with each other, and you see this green right over there. That's the rhythm of the market that he saw in there. And the blue one is the rhythm in the market that I saw in a dominant and minor pattern right there. So this is the minor one that he saw. And you could see it's actually following his pattern pretty well right there, but it's not far off of mine either. There's a variance in bottoms in here, which essentially is between September 11th and as far out over here as September 21st. So that's a pretty wide variance. Somewhere in here we're going to see which of these patterns is correct, but we're in this period where I said the risk is likely to increase. I told you back a couple of weeks ago that, I thought the market had topped. It was, there's not a lot more to go on the upside in here. Minor percent versus a lot of downside risk. Well, it did manage to eke out another percent or a little more on the upside in there. And now you can see that it's really starting to look like it's getting heavy. But it's a long way from any trouble. You can see the rising support in here. We're going to call for it to get into that support zone this week. This is 28.73 is the top of the support zone. The middle of it right over there is 28.60. So that is our best, most bullish projection that we could make right now on this pattern, is falling into that zone right over there this week. And then we'll see timing-wise how that works out. If it does fall into this zone and does not get below this 28.46 area, then it just continues this bullish upward trend. Whether it be the green cycle or whether it be the blue cycle, they're both bullish. Momentum strong, rock solid. It turns strong way over here at 27.67. And rallies up 125 points after that. So everything in here is bullish. You can see in here the projection oscillator getting down to the area of being oversold while this is positive. There's a few other occurrences that you could see that right over here. So the positive momentum is during this whole period right over here. Oversold, rally. Oversold, rally. And now getting oversold. So that says the market is going to fight any kind of a decline. Maybe you get another rally in here and then it rolls over like that. So we're not sure of the shape, but we talked about it a lot during these last couple of weeks, that the technical situation in the markets, and there is on the left is the weekly patterns that we look at. The technical situation in the stock market has been rock solid. Our market condition indicator trading up with the highest level, it could be 100, different indexes between 95 and 100, and the slim ribbon being in positive momentum. All of the weekly momentum indicators are all positive. You could see those on the stock index report, which are included with all of our memberships. I'm going to the city and I'm going to do a steady show. And I know all my fans want to learn how to make some dough. I've been